welcome, ladies and gentlemen. It's good to be here. I'm going to be walking through issues relating to immigration and also some issues relating to personal income tax and social insurance. We're going to be starting with immigration, looking at the immigration procedures, an overview and in a little bit of detail as they impact different categories of individuals. Looking at the flight opening plan. I'm also going to touch on some changes in the new Labour Code that impact work permit applications for expatriates. I'm then going to go on to talk about personal income tax and SHUI, particularly in respect of how, again, it impacts foreign workers, and then a couple of points in respect of the tax procedures. So firstly, immigration. As you're aware, as you're aware, there have been significant challenges throughout the globe as a result of COVID-19, not least of which is getting people moving across border. The Vietnamese government has an excellent response to COVID-19, as a result of which they closed the borders in March 2020 and suspended the issue of foreign visas. Once the COVID pandemic here in Vietnam was under control, they recognized the need for businesses to get foreign investors, experts and managers into Vietnam to support businesses and indeed to support the growth in the economy. As a result of that, guidance was issued in May 2020 for the approval for entry for foreign experts, and work permit applications were once again allowed. Following that, in July, they also provided guidance on the entry for family members of those foreign experts. The procedures have been changing over time as the COVID-19 has developed throughout the globe and indeed here in Vietnam. As a result of which, in August 2020, a couple of new guidance was issued. Firstly, for Vietnamese citizens, they have been repatriated from the start, but they were now, rather than going to government quarantine facilities, are now allowed to quarantine at a hotel at their own cost. Significantly, there was also guidance for short-term visitors, because there was a recognition and there was pressure, I think, from certain business leaders that they wanted to get certain experts in for a short period. So guidance has been issued for short-term business visitors as well. We'll go through some of these in some detail later on. In September, there was guidance on reopening frequent commercial flights to 7 destinations where it was perceived that COVID-19 was more under control. The reopening of flights has been predicated on guidance being received from the Ministry of Health in respect of controlling the COVID-19 pandemic in this instance, so that international flights can be reopened. In light of that, the Ministry of Health has announced draft procedures for entry of 3 groups of different passengers entering Vietnam. And we hope that in November 2020, the final procedures will be issued so that frequent international commercial flights can once again start. So that's an overview of the immigration situation here from the date of the COVID. So let's look at it in a little bit more detail now. So who's allowed to enter? So initially you have Vietnamese citizens and their foreign families, foreign holding diplomats or official passports and their families. Then you have the investors, experts and highly skilled workers and their family members, and also international students. Conditions for entry for all were completing entry approval procedures, apart from Vietnamese citizens, everyone testing negative to COVID-19 3 to 5 days before arrival, and having an international insurance contract for those other than Vietnamese citizens, or the sponsoring organisation who is bringing those experts in must commit to pay the medical expenses for the experts if the experts test positively. So what are the procedures? An overview of the procedures is, except for Vietnamese citizens, as said, all above individuals must obtain approval from the competent authority to enter Vietnam. The relevant competent authority tends to be the authority where the sponsoring organisation is registered. Where the flight comes into a different authority, or different province, the authorities from that province also need to provide approval. The procedures are changing over time. They differ from province to province, and they are very time consuming, so need to be taken into account in advance of any requirement for foreign workers here. In all cases, quarantine is required, but the type and length of quarantine will be differently applied to each group of individuals. So what I'm going to do now is touch on some of the differences between those different groups of individuals that implies to the procedures. So firstly, for short-term business travellers who are here for less than 14 days, the difference here is that rather than providing a hotel certificate for quarantine and transportation for quarantine, because they will be moving around, they are required to provide a detailed plan of who they're meeting, where they're going, what they're doing, which has to be approved. They have to provide a detailed travel schedule and specialised vehicle for transportation, and also medical supervision will be required. If they do test negative 14 days, after the 14 days, they will be allowed to continue to stay to work in Vietnam. As you can see, these procedures are quite onerous and will be costly. Therefore, the review of the requirement for short-term business travellers should be done in light of this. However, where there is an absolute critical need for an individual to be present in Vietnam, either for a short-term basis or critical that they get here and start work straight away, these procedures can be considered as an alternative to those that we're going to go through for normal experts coming in. So what's the difference for foreigners coming in from countries which are defined with good control of COVID-19? The main difference here is that when the expert arrives in Vietnam, they will go into a hotel, but if they do test negative for after the second test on the 6th day, they will be able to go home and complete the quarantine at home. This obviously creates less stress for the individual and also reduces the cost to the company sponsoring. The procedures for Vietnamese citizens coming in has been relatively stable. However, the only difference now is from August, Vietnamese citizens were also allowed to opt to go to a hotel at their own cost if they tested negative at the centralised quarantine areas initially. So most people will be coming in, for the experts and foreign workers and the family members will be coming in from other countries which do not have COVID under control, unfortunately. As I've said, the procedures are onerous and are particularly onerous if an expert does not hold a valid work permit and working visa or TRC before he comes in. The procedures, particularly in Hanoi in this instance, require that DELISA actually approve for the expert to come in, as well as the People Committee, the Immigration Department. This extends the pre-approval period to at least, or can be up to 2 months. For experts which do already have work permits, it's implicit that they've already got approval as an expert to come and work in Vietnam. Therefore, the approval process is slightly shortened. As we have said, there's been changes continuously in the approval procedures. Recent ones in Hanoi are worth noting. The entry approval authorities now are 3. There's now a new Hanoi Steering Committee for COVID-19 Prevention and Control. There's approval required from the Hanoi Department of Health, as before, and the Immigration Department. One thing that's quite critical is that now an expert that has no work permit can apply for a DN visa but the term of the DN visa is only 29 days. This will impact effectively the procedures that companies may want to consider when bringing experts in. They may wish to decide to wait for the work permit to be issued, or if it's critical to get the individual in, they come in without a work permit, but because the DN visa is only 29 days, it is likely, more than likely, because the work permit cannot be granted whilst here within that period, that another DN visa will have to be applied for. This again increases the cost of repatriation of individuals here. The third change in Hanoi is that the COVID-19 test expenses now need to be borne by the expert or sponsoring company, whereas previously they were borne by the authorities. So one of the key difficulties of getting people into Vietnam is the fact that there are currently very few flights. Most of the flights here are returning Vietnamese or bringing Vietnamese citizens back, repatriation flights. There are charter flights that are being approved, but to date only 2 commercial flights, I understand, have been allowed in. So this results in difficulty in flights being cancelled, and also the high cost of flights, or more increased cost of flights for individuals coming into Vietnam. We very much hope that the procedures to be issued by the Ministry of Health come out soon, such that the flights can be reopened from those countries where COVID-19 is seen to be under control. Those being China, as you can see on the board, China, Taiwan, Korea, Japan, Cambodia, Laos and Thailand. It should be noted, this should result in people from other countries having also additional routes to come into Vietnam, because there are still commercial flights in certain instances to these countries from other jurisdictions. However, if you are transiting through these countries, you will not be allowed to take advantage of the reduced quarantine at the hotel. If you're test negative for COVID, you will still have to do the 14-day quarantine as required because of coming from a country where it's perceived that COVID is not under control. So what are the plans that the Ministry of Health has in draft? Just going through this very quickly indeed. There are 3 categories of individuals that they see coming in when the flights reopen. Firstly, Vietnamese citizens and their foreign family members. These individuals have to have a valid passport, take a COVID test as before, have entry permit documents for foreigners, have an invoice confirmation from a hotel for quarantine and transportation from airport to hotel, complete a medical declaration online 12 hours before, and also do the standard quarantine for 14 days. The second group of people are the investors, experts and managers and their family members and international students who will be here for more than 14 days. In addition to the requirements for the Vietnamese citizens, they will also have to have, as previously, international insurance coverage or commitment from any sponsoring organisation to pay all COVID-19 treatment expenses in the event they test positive. The third category of individuals are foreigners holding diplomatic or official passports and family members, and experts here for less than 14 days. The main difference here is these individuals will not have to have an invoice or confirmation from hotel for quarantine. Instead of, they will be required to submit lodging, travelling, medical and working supervision plans to prevent COVID-19. So therefore, in summary, we believe the Vietnamese government have taken very positive steps so far to enable foreign experts and their dependents to enter into Vietnam. And it's one of a number of initiatives that have been taken to control the pandemic, adapt to a new normal and boost the Vietnamese economy. Depending on the COVID-19 situation here in Vietnam and around the world, it is likely that these policies will change. And therefore, it's really important to keep on top of what the current policies are with respect to the repatriation and deployment of foreign workers. And as we said before, the procedures for approval and quarantine and medical supervision also vary from province to province. Therefore, we highly recommend that organisations check with the local provincial authority before dispatching experts there following quarantine, so that you understand the local requirements. So that's a summary of what we're talking about on immigration. Now touching on 2 updates for work permits for expatriates under the new Labour Code, referred to before by Hua. There are now two new cases where work permit individuals will be exempt from having a work permit. They are married to a Vietnamese citizen, or they are chairman of a board of management of a joint stock company. But in that instance, the joint stock company has to have capital investment of over 5 billion Vietnamese dong. Therefore, this will not apply to small business owners. However, there is going to be a limitation on work permit renewals going forward. The new Labour Code states that you can have a maximum work permit of 2 years, which is the same as it is currently, but that this can only be renewed once, whereas currently it can be renewed a number of times. This could potentially impact or potentially create further review of the need for foreign workers going forward. However, we have spoken, or it's been verbally confirmed by Melissa in Hanoi, that the sponsoring organisation of the can apply for a new work permit for the same individual who has already been working with them for 4 years. However, we await new guidance and law to clarify this matter. Moving on to personal income tax and SHUI issues, let's start with those relating to, again, foreign workers. So there has been a favourable response from the tax authority on the tax treatment of visas and temporary residence cards fees for expatriates. As the visa and the TRC are necessary for an expatriate to come and live and work in Vietnam, it is really the responsibility of the employing company to obtain these documents. Therefore, they should not be treated as a benefit in kind for the individual and not be subject to personal income tax. This has been agreed by, confirmed, through an official letter issued to Eurocham in May this year, which is very positive. As the official letter has been issued to Eurocham, which is a business organisation, we believe that this should apply to most companies, all companies employing foreigners, from the date the official letter was issued in May 2020. Let's also look at the PIT treatment for COVID-19 quarantine expenses. There's been a number of official letters issued in respect of this. Two letters issued by Bac Ninh Tax Department indicate that hotel expenses incurred for quarantine, as required by government, should not be treated as benefits in kind and therefore should not be considered taxable income for expatriates. However, an official letter issued by the Hanoi Tax Department and Bac Giang Tax Department regarding quarantine expenses state that if the expenses clearly state the name of the beneficiary, they will be included as a benefit in kind subject to PIT. However, if the expenses do not specify the name of the beneficiary and are paid on a collected basis, say for example where you have a number of experts coming in together, they should be treated as PIT exempt. Therefore, you can see there's some inconsistency in treatment here. Therefore, we would recommend that you review the specific case in point and, if necessary, contact the local tax authority relevant in your case. Now looking at the impact of social insurance on foreign employees who have a local labour contract. From December 2018, social insurance also applies to foreign employees. The contribution rates at the moment are for the employer 3.5% and no contribution currently for the employee. However, starting from January 22, the contribution rates will increase significantly. The employer rates at 17.5% and the employee at 8%. As you can see, this results in quite a significant additional cost for the employment of a foreign individual. The employer contribution per individual, assuming that the cap base for SI is used, is going to be just above $2,000 per annum per individual, and for the individual, an additional $1,200 per annum. In addition to the contributions, the employees should be able to obtain a refund on leaving either termination of the labour contract or on the work permit not being renewed from the social insurance fund, along the lines of that available for the Vietnamese individuals. However, regulations have not been issued specific to this, and we understand that regulations relating to the Vietnamese employees will apply. Therefore, we believe it is time to plan for this change. This is coming up in the beginning of 2022, and we're now coming to the end of 2020. I think for organisations with a number of expatriates, we would recommend the following: that there's a clear communication strategy and plan to update the employees so that they understand the impact and obligations of participating in the SI scheme and what benefits they could potentially get as well. We believe that you should review the current remuneration model and look to do a cost projection based on current SI responsibility for 2022. And as a result of that, there may be room to restructure the current remuneration model, which may reduce costs whilst remaining compliant for the company and ensuring that there's no significant negative impact on the employees' benefits. So we would recommend that for those organisations with a large number of expatriates, this review should be done in the near future. Lastly, the new tax administration policies as related to PIT. The law on tax administration effective 1st July introduced a new deadline for direct PIT finalisation, extending it from 90 to 120 days, which was very welcome. Also, there is a new personal relief increased from 9 to 11 million and a new higher dependent relief of 4.4 million. These apply for the tax year 2020. Where you have the first tax year straddling 2019 and 2020, the old family relief for 2019 will apply, and the new family relief for 2020 will apply for 2020. For Decree 126, there are 3 points of note. PIT and employment income shall be declared on a monthly basis going forward, unless taxpayers are eligible for quarterly declaration, an example of which would be if they can declare VAT on a quarterly basis. Secondly, if the employer revises the company finalisation return, it must also revise the relevant monthly and quarterly return. And the decree specifies the sequence and procedures for suspension of immigration if individuals have not fulfilled their tax obligations upon leaving Vietnam. So that concludes the review of the immigration and PIT and SHUI matters that I'd like to discuss today. Thank you.